to Breaking Bread presents back half. During this session, I will be showing you how trading the back half of the candle will make you more confident and consistent in your trades. It's too many times as traders, we either jump in too early or we get faked out of our trades. But if we just wait, let price show his hand, we'll catch a cleaner, higher probability trade to where it doesn't feel like you're working a 9 to 5 in this market, right? But I'm going to walk with you guys through why being patient during the candle matters. And I'm gonna show you some examples as well, and then provide you guys some tips that you can start using today. So let's get into it. All right, so some of the things I will be discussing in this session is candle anatomy, trading on the back half, the purpose, good versus early entries, examples, and then I'm gonna share some tips with you guys. And then of course, we're gonna end with the bread and butter, which is just a brief recap of some of the things that I'm discussing today. All right, so let's look at candle anatomy because this is so important. Regardless if you're trading on the back half or not, you should always know how a candle is forming. So for your uptrend, your bullish, your longs, your calls candle, right? This candle opens at the bottom of the body. It pushes to its lowest point before buyers step in, buy it up, creating this body, pushing price higher. All right, we're going to our highs before we close at the top of the body. Whereas your bearish, your downtrend, your shorts, your puts candle opens at the top of the body. It pushes to its highest point before price sells off, seller steps in, price is getting lower, creating this body, going to its lowest point, and closing at the bottom of the body. So we know for sure each candle has an open, a high, a low, and close. Depending on what order it goes, that's the direction price is going to do. But we know for sure we need an open, a low, a high, a close. So if I'm looking for price to continue to the upside, I know on whatever time frame, price has to go put in that low before heading to the upside. If I'm looking for price to head to the downside, given the time frame, I know that price has to go put in that high before heading to the downside to continue to the downside, right? So in knowing that, it's a high probability that the front half of that candle is the manipulation move. That's the move to where they're trying to trap you and fake you out of your trades or scare you out of your trades and have you jumping in early because you'll see price push through a major level, right? As soon as you get in, push through a major level, and then that back half of that candle will say, I was just playing. We go the other way, right? So that's what this call is about. To have patience during that first half of that candle, whatever time frame you're trading on, and let's get to the back half of the candle. So the back half is just waiting for the second part of a candle or time frame to develop before making your trading decision. Now, why the back half matters? The first half of the candle is where the battle normally happens. It's the back half where you see price true attention. So that first half is normally the manipulation. Like that's not really what it wants to do, right? It has to pull back, it has to get some gas, it has to get some liquidity, if you call it that. But that back half is where you see price true intentions. We understand that price has to go test those highs. It's going to go test those lows, right? And that's where traders get trapped because they're going to bite on that move. But if we can be patient that first half of the candle and see what price true intentions are, that would definitely save us a lot of heartache. Now, what's the back half of the time frames? Well, some of the ones that I use are the hour, the 15 minutes, and the 5 minute. So, of course, the back half of the hour is just half of the 60 minutes, which is 30 minutes, but it's that 31, 61 minute range. 15-minute time frame is between that minute, I'm sorry, that 8 minute and 15-minute range. And then the 5 minute candle is normally between that 3 minute and 5 minute range. And if you're trading on a 1 minute, then the back half of the 1 minute is 30 seconds. So it's that back half of the 30 seconds of that once the 1 minute time frame that you should be looking at. Now the purpose is to give you clarity, right? You let price reveal its true intentions. There's no guessing involved. You just let price give you that clarity. So you want let price do what it wants to do first. Let it set up, let it build structure, right? That's what you trading on the back half is going to do. Also, patience, right? You avoid the emotional entries and you stay disciplined. It's going to give you a stronger confirmation. The back half, you can better tell if buyers or sellers are truly in control. right? And then it reduces your fake out. So many bad entries happen because traders jump in too early, right? So we want to avoid that as best as possible. And then high probability setups. You're trading when odds are more in your favor and not just hoping for a move. I'm sure we've all been there to where you think, oh, okay, price is heading this direction. As soon as we get in, it starts moving in our favor. We're like, oh, we good. And then boom, it turn around and go the other way, right? But it's just about being mindful. Did we get in at the front of that candle or the back half of that candle? Was it trending in a particular direction? And it was just a pullback for price to head back and heading in this original direction. Those are all things we got to keep in mind. All right, so a good entry versus an early entry. There's definitely a difference between a good entry and an early entry. Both can definitely lead to profits, but the good entry is your higher probability setup. So, um, having a good entry will confirm your bias. So you let price confirm your bias. Your structure is going to be clear. We can identify, are we making higher highs, lower lows? Are we breaking out of a range? Are we respecting major levels? Right? Your risk is defined and it's smaller. You enter with momentum and you're not guessing, and you have a higher chance of immediate follow through. So we know after price pulls back and start heading in the direction that it wants to head into, it shouldn't pull back again like that, right? It should keep going, and create more levels, right? So that's with a good entry. Now, an early entry, you're entering before confirmation, right? You're entering just guessing the direction without proof. No structure built up, no major levels being respected or being disrespected. And then your wider stops are getting wicked out, right? So if you're trying to get in early and it's a high probability of price trying to come back and stop you out of your trade or scaring you out of your trade, um, so that's what an early entry is going to bring. It's definitely emotional driven when you don't have structure built up, right? You're just going off of what you think or what you feel. And that's not how we should trade. We should trade with what price is saying on the charts. And there's a higher chance of you getting shaken out of your trades. Like I said, we've all been there before to where we see price make a strong push in a particular direction. We hop in. As soon as we hop in, maybe a second or two later, it goes back the opposite direction, right? So we just want to avoid those early entries and just have those good entries. So like I said, you want to let price do its thing. So let price move, let it go test the levels, let it create structure. Let's identify if it's buyers or sellers in control. Let them fight it out. And you just wait for the story to unfold, right? Once you see it's buyers in control or once you see that sellers are in control, then you look to execute on your trades. All right, so let's look at some examples. All right, so here we got the hour time frame, we got the 15-minute time frame. So the hour candle that we're going to pay attention on in this example is this white candle here. This black line at the top is the major level. The same thing on this 15-minute time frame. This is the major level. So we know that it takes 4 15-minute candles to make up this one hour candle, right? So the 4 candles that we're going to look for are this is long white one, this uptrend candle, this candle here, and this one here, right? So if we look at the first 2 candles, right, that's the first 30 minutes, we see that price made a push to the upside here, right? So this candle here, it went to the upside first, right? And then this next candle, once we got into the back half of the candle, it actually opened up and went to the downside, right? So if you was in this, if you were looking to get into this trade, you're like, all right, great, let's get into this trade. Price heading to the downside, making a strong move, and then it start making its way back up. Now you stuck. Do you cut? Do you hold? Like, what do you do, right? You're not letting structure build up. You have to let structure build up for you, especially when you start to see price pull back up like this. You got to let that go now. You got to let that go because it pulled all the way back up, went back to this major level, and it sat there. Now, it's not until the last 15 minutes of this hour candle to where price opened up, it went high, and then it came back below that major level. This is why it's so important waiting for that back half of the time frame. And don't be so stuck on, like I said earlier, oh, okay, our time frame. Well, after the 30 minutes, we should be good. No, because I just showed you right here to where you weren't good until that last 15 minutes. It's times to where you'll see the hour won't make its true intention move until like the last 10 minutes of that hour before it closed, right? But you just want to identify, am I getting in on the front half, on the back half? If I'm getting in on the front half and it's not going with the trend, then I should be concerned about that, right? Because it's a high probability that back half is going to go the direction that it truly wants to go. So keep that in mind. So anyway, price pushed above this major level, started to head back down. The back half was the true move in this example here, right? And you see it clear on the hour time frame, right? It pushed all the way higher, and then it started making its way back down. Right. But it's just about looking at structure and what price is clearly saying and what it's not saying. So if you don't have confirmation that buyers nor sellers are in this trade and just looking at this hour time frame, it's not really confirmation, right? We are sitting inside of a range here, right? We're not making any new highs. We're wicking, we're pushing, but where are we closing, right? So let structure build out. Let price tell you what it doesn't want to do, which is clearly here when price rejected off this major level here and started making its way back down. Then you can look to take entry on the back half of that candle after price tells you what it wants to do. All right, so next example here, I got the 15-minute time frame and then the 5-minute time frame. The 15-minute time frame we're looking at is this candle here, right? So it takes 3 5-minute candles to make a 15-minute candle. So that's this candle, and this candle here, right? So if we're looking at this, the back half will be these 2 candles here on the 15-minute candle, right? It'll be like half of this candle and then this candle as well. But 3 5-minute candles to make this one 15-minute candle. So you see black line, major level. If you was in this trade to the downside, you saw this candle open up and it pushed all the way below that major level and started making its way back up. Remember earlier, I told you guys, if price is trending in a particular direction, I don't want it to go in that direction first. I want it to go in this direction last. So if I'm looking at this to the downside and I see this candle open up and we push down first, unless we're going to continue going. So let me just say that, unless we're going to continue going. But once price broke through this major level and started making its way back up, that should signal to you in your head, wait, why are we doing that? Why are we doing that, right? Why did we go down first and now we're pulling back up to go make a high? I don't want to see that, right? And if you're not in this trade and you see this, then you see price push past this major level and start making its way back up. Well, boom, somewhere in this candle you should be getting in. Like I said, this is where the back half is, right? Between this candle and this candle, right? But that should be a sign to you if you're in this trade to the downside. I don't want you to go down first. I don't want you to go down first. I'm more confident to hold this trade. If you would have went up first, made that high, flipped that back to the downside. Now let's go. Now let's go take care of business, right? So just keep that in mind, especially if you're trading on the smaller time frames, the 5 minutes, the 3 minutes, the 2 minutes, the 1 minutes. If we're trending in a particular direction, I want you to go get the gas first, and then let's continue to the downside. All right, so next one, we got the 5-minute and the 1-minute time frame. We're gonna look at these 2 candles here, right? So that'll be these candles here. We know it takes 10 1-minute candles to make 2 5-minute candles, right? 5 plus 5 is 10. It takes 10 candles. So if you look at this again, we know that price opened up. It pushed below this major level, started making its way back up. Somebody got trapped here. Again, price opened up, pushed below, price started making its way back up. Somebody got trapped here, right? It's bad enough that this candle pushed down and told you the story that it doesn't want to go lower. So for this candle to open up and make a strong push in this direction at this major level, and then you're hopping in with no clear direction, this is how you get caught. This is how you get trapped, right? The front half of that candle is the manipulation candle. Same thing with this one. It's like, okay, well, now it must be ready. Opened up, pushed down. It wasn't ready. It wasn't ready, and it was never ready, right? Because it continued going to the upside, right? And we're just looking at it on the 1 minute time frame, right? It pushed up, and I'm sorry, yeah, it pushed past the level, right? And then started making its way back up and then made a strong drop. It did it again, pushed up, dropped. Then it made its way back up again. Then it gave you one last test just to tease you, just to see if you was gonna fall for that bait again, right? And then it started making its way back up. So the back half of the 5 minute candle is this candle, and this candle. For this 5 minute candle here, right? So it tried. It's like, let's see if we can get them one more time. Can we get them? Can we get them to hop in for shorts? Even though price is holding this major level, price is talking to us. And if you're not listening, then you're not listening. But price is definitely talking to you. But you got to listen to what price is saying and not your emotions, not your feelings, not what you think. Play what you see, right? So, like I said, back half of the 5 minute candle here was the true move, right? So it made that last fake move, got you, they out of here. Now you either hitting your stop loss, taking an L, whatever's going on, but hopefully you're not in this trade once price starts heading back up to the upside. All right, so some tips. Wait for confluence. So stack your confirmation for multiple time frames before pressing that button. Confluence is so big, it doesn't matter if you're trading on the front half or the back half. You want to make sure you have confluence in your trades. For me, I only need two things in confluence for me to take a trade. But you want to make sure you have that in place before taking the trade. So if you need price to come off your VWAP, your fair value gap, your SMAs, your EMAs, then go ahead and do that. But when you're looking for entry, identify, am I entering the front half of this candle? Because this definitely could be manipulation. Or am I entering the back half? And does that confirm what the confluence I'm building says on the charts, right? Based off the higher time frames working our way down. Also, focus on structure. So let price set a clear high, low, and direction first. So like I said, let price go sweep some highs, or let price go sweep some lows. Let price reject a major level, or bounce off a major level. Let price tell you, is the buyers in control or sellers in control? Let it build that structure before looking to get into your trade. Also, patience wins. So avoid chasing. Those strong moves, like I just showed you, where price pushed past those major levels that I showed you here, it pushed past the major levels, came back up. That's where they get you, because this was a strong downtrend candle before price came back up. This was a strong downtrend candle before price came back up. Even this candle here, it was a strong push, but where did we close? It's more important where we close that when price gets to major levels than where we're pushing at. So don't fall for the bait. Don't fall for the bait. Smaller size early. So if you must participate early, use a smaller size and scale in when you have confirmation. So if you normally trade 10 contracts, then go ahead and put in 5 or 2 to 5, however you want to do it. And then when you get confirmation, then go ahead and add the rest of the cons that you normally take. If you just must be in a trade early and you just can't be patient for whatever reason, you can go ahead and do it that way, right? So don't oversize when you're too early. Protect your risk. So your stop loss should make sense with the structure, not your emotions. Always place my stop loss off for levels. I'm not too concerned about how many points it is. It's more so of what price it's respecting or disrespecting when I'm in a trade to where I'm placing my stop loss. So make sure you're doing the same thing, right? Especially if you're getting in early. If you're getting in early, you're going to keep that stop loss tight because it may not be ready to go, right? It may not be ready to take off. That's why it's considered early, because you don't have all the information yet. And then let price prove itself. So trust what you see, not what you feel. Let the story develop fully, and before you're acting, right? I always say to be a reactive trader, not a trader that predicts, right? We can all predict, but is price doing it, right? So just play what you see in the moment, remove your emotions, and just trust what price is saying. It's only you and price. That's it. That's all you got. So trust what you're seeing on those charts. And once the price proves to you, okay, we're heading to the upside or to the downside, well, it's time for you to execute. All right, so some of the things we talked about in this session is the first half is typically your faith move, right? So we understand if price is headed to the upside, it's probably going to head to the downside. Go get some lows, go get some gas, trap some traders in some trades. right? It's normally going to do that the front half of that candle. But it's that back half is where the true intentions of price come in, right? So if I'm looking at the hour time frame, you have to understand if price is to head up to the upside on an hour time frame, I understand that price has to go put in a low if we are to continue to the upside, right? But it has an hour to do it. So it can go play back and forth, back and forth, back and forth. But that back half of that candle is where it's starting to rev up and it's really about to start showing you which true direction that it wants to go in. So keep that in mind. We also talked about playing the back half reduces your fake outs. I just showed you guys examples to where price pushed past the major level, and I'm sure traders got stuck in that trade only for it to turn around and go the opposite direction. We talked about good entry versus early entries, right? We want the good entry. We don't got to be the first one into the trade, right? Wait till you have confirmation. Wait till you have confluence with what the higher time frame is saying on the charts. If it all flows together and you have that confluence, you have that confirmation, that's the good entry. If we're getting in and we don't have any confirmation, we don't have any confluence, we're just getting in because we feel price is about to do this, but charts is not confirming that for us. That's an early entry, and we don't want that. Like I said, trading the back half is going to give you your higher probability setup, right? So we got the confluence, we got the confirmation. All we have to do is execute. That's all we can do. And if price goes our direction, it goes in our favor, right? If it doesn't, it doesn't. We'll move on to the next trade. But all we can do is take the highest probability setups. When price presents it, execute, it pay out, it pay out. And hopefully it pays out. All right, so we have come to the end of this session. If you guys have any questions, feel free to DM me or drop it in the comment section below this video here. But until next time, I thank you guys for breaking bread with me. You guys stay blessed.